Hey, good morning, everybody. This is Dan at Data Trend. Today is October 22nd, 2013. It is a Tuesday and it's about 5:23 a.m., so 2 hours or so before the market opens here Mountain Time. Today, I'd like to just run through the positions that I've closed out and what I have open and kind of give you a rundown on where I am in the portfolio. What we're looking at here is the IWM, the Russell 2000, and this trade was closed out on Friday. Initially was involved back here on September 30th. Opened up a put credit spread with a stop down here. Um, I don't know, let's call this 103.50 or so. And we got a nice shakeout down to that level. And price actually traded down through it on an intraday basis. And then we got this gap higher the next day, and we just ran up from there. And it was really easy to close the spread last Friday with that final push higher. And this is one of those examples where it's a really great idea to have some sort of a rule, have some sort of a plan. Because if you were sitting here, I got an alert in my email on Friday that said price had hit my stop level right here. Let's call it 103.50 again. And, if you had no rule and you were just saying, oh man, I'm taking some pain, this looks really ugly, price is selling off here, maybe I should close this, you'd be covering that trade only the next morning to see a gap run higher. And that's one of those things that if you trade on a discretionary basis is hard to deal with because nobody really likes to be wrong. Um, if I'm short in here and I get stopped out, the system's wrong. It's not me. I don't have to attach any emotion to that. I don't have to take it personally. It's just the way that it is. I mean, nobody wants to be wrong, but sometimes we are. At any rate, the IWM trade closed out on Friday for I think a 10 or 11 cent debit. The details will be on the trade spreadsheet on the credit spread page of the blog. Let's hop over. TLT is the only position I still have open in the November cycle. And it's just really been chopping around in here. Not much has happened. We're up a little bit of money. And this is one of those examples of why the credit spreads are nice in a market where you don't have a clearly defined trend. So if we hop over here and take a look, this is the gold trade. We'll talk about that in a minute. And let's pull off this naked option. But this is our TLT trade. And so we have the 101, 103 put vertical, and this is the live price here yesterday, 106.75 or so. So we have a little bit of an open profit in here, and it's not because price has gone in our favor or anything. I mean, it has a little bit. We initially were involved right back in here. So price is basically at the same point that it was when we opened the trade, and we're up 20 bucks on that. And that's just from the decay of our short option down here around 103. And hopefully what I want to see happen is I want to see this either push a little bit higher, and it should be easy to pull it off, or if it really wants to, maybe it can continue to chop along in here. That would be fine with me as well. What I don't want to see is I don't want to see a drop back down to this 103.98 level or so. That would make me exit the trade, and I may or may not make any money on it. Let's go to gold. Our November gold position was closed, and that was pretty easy breezy. I think I initially got involved back here somewhere in late September, and we got this big nice sell-off down here and closed the trade out. And again, the details will all be on that trade spreadsheet. But then in the past couple of days, we had this pop in gold right up to the average true range trailing stop. And that's sort of the point at which I'm looking to enter new trades. And so yesterday, right here, I was able to sell a call spread, and I believe I sold the 132, 137 call spread for about, I don't know, I want to say $1.06 or $1.07. Yeah, 107. And again, here's our short option 132, long option 137. And this is the stop level for right now, 129.60. And so if price immediately trades to that level, I'm looking at a loss of, say $43, $44, something like that, plus commissions. And I'm hoping to collect 80% of this credit, 107. Forget exactly what that is, so an $81 profit or so if we're able to exit that. And incidentally, maybe we'll take a look here at the FXE trade. The FXE trade has been on for a little while. Let's see, specifically it was open 10-9. So we've been into this. Let's find that day. Since here, and in this case, price and time are working in our favor. We have this little gap higher. I haven't quite hit the profit target on it, so I just have it sitting open. Hopefully we don't get a fall back down here. That would be painful, but generally it sort of looks like price is in something of an uptrend in here. If you look at the moving averages, the 10-day moving average is above the 20-day, is above the 50, which is above the 200, and the average true range trailing stop suggests a long trend. So I'm not too worried about it. I'm just sort of letting it sit out there. UNG is the last trade I opened yesterday, and I have the 1814 put spread on this thing, and it's the only reason I'm able to trade this is that the implied volatility of it is so high. I mean, we're talking about 30% implied volatility on an $18 underlying, and so our level here, our stop level is 1835. We can hop over and take a look at the spread that I have open. Oops, I guess we don't want to do that. So here's the 1814 vertical spread. The 14 that I bought for, I think, 3 cents. So it's really, this is not, I talk about one side of the spread is destined to lose money, and that is definitely going to expire, I'm sure, or just lose the full value of the premium. And really what I have is the short option. The thing that's nice about having that 14 down there is it's sort of one of those sleep at night type of things. And the UNG, I mean, this thing can gap. It went from here 1950 all the way down to 17. So it's a $2 move. It's unlikely that we're going to see it fall that low, all the way down to the 14, but it's definitely possible. The thing has always been kind of hard for me to trade, and I never know what's going to happen. And to pay $3 to just know that my risk is capped out there makes me feel a lot better. And let's see, so he sold this for a credit of about 55 cents, and it looks like we got this big fall down here intraday, and I was filled somewhere probably when price was around 19, and it continued lower, so I'm underwater on this a little bit, but nothing really to worry about. I mean, this is my level, and we'll just see how it all plays out. But I hope that helps. There's going to be a post on this out on the blog, and I will update the spreadsheet on the credit spread page. I hope that helps. Visit me at www.thetatrend.com or send me an email, dan@thetatrend.com. Thanks.